Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Jim, we're going to talk about two different things. One is the gold sector and how the gold producers have responded to record high gold prices. And the other involves a bottom fish I introduced back in May called Nevada Organic Phosphate, which may be only a week or two away from having a green light to try and deliver America's first whole rock organic phosphate fertilizer.
To what extent have gold producers responded to record high gold prices?
This has been a question in my Slack forum amongst my subscribers. The sense has been that the gold producers have indeed responded to the rise in gold price, which again exceeded $2,500 this week. Yesterday it was $2,483. This is record high territory for gold. And one of our picks, that bottom fish picks that I recently turned into a favorite, Vista Gold, it started creeping up, but its valuation is still very, very much far below where it should be if you took $2,500 gold seriously. So I wanted to get a sense of how well have at least the producers performed so far. So back at the start of 2020, I created a gold producer index, which was all the companies that were producing 100,000 ounces or more per year. And it is up 49.1% from the sort of the starting time out January 2nd of 2020. And gold itself is up 63%. It finished off 2019 at 1523, and now it's 2483. And from this list, I've distilled two groups of companies. There are the majors that are producing 500,000 ounces or more annually, and there are the intermediates, which are producing 100,000 to 500,000 ounces annually. And what I have is a set of 14 of each of these, and I put them all together, and everybody who goes to my KRO comment will be able to see this. And I took the bottom for gold, which was on February 14th when it dropped to 1985, back below $2,000. And from that day on, it has been on quite a tear. And it has literally gained 25% since mid-February. And so I took that same closing price for each of these companies and calculated what they were as of Thursday's close. And the range is from 15% all the way up to 132%. And the loser in this batch is which one was it? Oh yes, it's poor B2 Gold, up only 15%, and the winner is New Gold, up 132%. But most of them are ranging between 25 and 85%. So most of them have responded better than the price of gold during this period. So when I was staring at these on my big screen as sort of a big collage, I was looking for some sort of impressions of what's going on. And I noticed that most of them have not reached past their peak during the 7 years. Most of the peaks took place during 2020, when in response to COVID, we had gold a breakthrough through $2,000 in mid-August before it sank back. This was 2020. We saw a tremendous inrush of capital into the juniors too, led by Eric Sprott, financing an awful lot of the ones that were ounce in the ground type evolving stories. But one of the sort of strange things I observed at the time when I compared the TSX venture resource listing traded value in the months of that year, it was actually less than the total financing activity of resource juniors. So it was, although big true believers in gold such as Eric Sprott and everybody who followed him in and put money into the treasuries, they came into the market, but there wasn't really a true follow-through, which is why the whole gold sector has since faded. Now, most of these intermediates and major producers, they are showing uptrends. But what's really interesting is that the volume traded in the past quarter, when people started to take the price of gold seriously, it is basically unchanged. In some cases, it's even less than it has been for a typical day for the past 7 years. So even though these producers are trending up, it is not as a result of new buying, heavier trading volume. And that tells me that the best is yet to happen. It's smart money that's buying these producers. They're crunching the numbers. They're understanding what this higher price of gold, which is in real terms, when you take $400 in 1980 as the base, the adjusted price after 50 years of gold being controlled at fixed at $35, you take that as a base, and CPI inflated, that price should be about $15.54 today, which means the current price is a 60% real gain. And what's interesting is that from between 1980 and 2009, the actual price of gold stayed below its inflation-adjusted price. It only crossed over in 2009, 2010, when we had that big bull run, and then it crashed back to that CPI line in 2016, and it sort of tracked it. But only in 2018 did it start to take off. And the market is not really taking this seriously, because again, the market typically is irrational. It's not a number cruncher. It doesn't understand that this $2,500 gold we have now exceeds the inflation from the past several years. And inflation came in at 2.9%. Interest rates have been high, and they just adjusted the employment jobs numbers for the last 7-8 months. It has been exaggerated by 800,000. The new jobs appear to have been half of what was reported. So the whole basis for Jerome Powell and the Federal Reserve being anxious about inflationary pressures by strong job growth, this has been false. So the market has started to say, interest rates now have to come down. The U.S. dollar has already slightly retreated against the currencies that it has been lording it over. So we do have a setup here where we can potentially see gold break out even higher, because when you lower interest rates to stave off what might be a recession coming, gold becomes more attractive, because of course gold doesn't pay any interest. And when you've been able to roll your money in 1-year T-bills at 5%, why would you waste your money on something like gold, which is why it's been so peculiar that gold has trended up this year. And of course the explanation has been that it's been overseas buying, central bank buying, Chinese buying, but apparently that stalled a couple of months, and we're starting to hear reports that in the past month or two, European and North American investors have started to enter the gold market, and they've been buying the ETFs and also physical gold. But you don't see it in the GLD ETF. Yes, we are now seeing more days when the ETF gains gold and loses gold, but we're still down 683,000 ounces from where we were at the beginning of the year. And in terms of daily traded volume, there is nothing interesting going on there. Well, we had a bit of a spike in April when gold started breaking out, but that subsided again. So when you look at the numbers, there's no evidence that there is an awakening interest in gold, that we're in a secular gold bull market. And yet we see the price of gold trending higher, refusing to crash back below $2,000. And sometime between now and the end of the year, there will be an inflection point where suddenly everybody wants to own gold. And to me, the most obvious inflection point will be the November elections. Trump's team has already signaled that anything but a victory will represent another stolen election. This time they will be much better prepared to try and mount a coup and riot. And this time, of course, it's possible that the Liberals themselves may be ready to riot. So there could be a lot of chaos in the aftermath of the early November election, because where the outcome is unknown, various states may not be ratifying the counts or anything like that. We're seeing harassment of election officials already happening. So we're entering a scary, unstable period. And during that instability, the market may say, we need to own more gold. It won't just be Americans. It could be the entire world owning more gold. And the hope, of course, is that everything eventually stabilizes and we know who is in charge and what the sort of policies are going to be. But none of that is going to change the ongoing conflict between the global West and the global East, which the global West right now seems to be losing against China and Russia. And that trend, that's going to continue to put upward pressure on gold. So I'm feeling very positive. And for those of you who follow the KRO favorites, Vista Gold is the one to watch, but also watch these intermediates and major producers, because when they start to accelerate, because they haven't really exhibited the sort of leveraged gains that you would expect from a move like that. And that's because the optics are only 25%. That's not like gold going up 500% from $300 in 2003 to $1,800 in 2011. The visual optics are not there. You actually need to be a number cruncher, a rational person, not just an irrational momentum chaser, to understand the value that's staring us in the face and to appreciate the underlying logic, which is going to push the real price of gold higher over the next year.
What are the chances that the BLM will grant an exploration lease to Nevada Organic Phosphate for its organic phosphate Murdock Mountain project?
Now, Nevada Organic Phosphate is not a KRO favorite, and I really shouldn't be talking about it because it is a bottom fish designated company within my Kaiser research universe. But they were part of my Metals Investor Forum session in May in Vancouver. And so I decided, well, since I'm going to be talking about it in public, I should make it a part of the Kaiser Watch series. Now, the story is, you can catch up on all the background in the 2 episodes that I published on Kaiser Watch on May 8th and on July 5th. You can find these by going to the blog section of my website and scroll down and find those dates and click on it. And all the background that you need to understand these stories, this story is there. Now, the important thing that I talked about on July 5th was that the BLM had finally published an environmental assessment that represented a FONSI, a finding of no significant impact for the Murdock Mountain phosphate lease application in northeastern Nevada. And on July 5th, that kicked off a 30-day public comment period that closed on August 4th. Now, this stock is a bottom fish and has a pitiful $3 million market cap because there are 5 important missing pieces with it. The first missing piece is title to this project. Now, the vendor of this project has been trying to get this lease application pushed through starting more than a decade ago. It was interrupted when they declared a giant sage-grouse wilderness study area that basically covered the northeastern corner of Nevada where nothing was done. Then COVID came along and there was another couple of years of nothing getting done. But then 2 years ago, the project had been vended into the CSE shell, which was renamed Nevada Organic Phosphate, and they have been funding all of the environmental impact work required for this lease application. Now, phosphate is treated differently from metallic minerals like gold and copper. It is in the same class as potash, as coal, as natural gas, and oil. So when you apply for a lease, you figure out what land you want You submit it for the particular commodity that you're after, and then the BLM does an environmental assessment as to whether or not they should grant you title to this, which then also constitutes a drill program to drill it. And they want to assess what the environmental impact will be of drilling this. With metallic assays, you stake first, you've got title secure, then you go and submit yourself to the BLM or U.S. Forest Service and try to get the permits to drill something. Now, this comment period ended on August 4th, and I've now had a chance to see what the comments were. And there were two government agencies that weighed in. One was the EPA, which was concerned that the roads, the public roads that go to the project area that's supposed to be permitted, pass through the wilderness study area. And they were also concerned that there were no provisions in the EA made for putting up baffles to prevent the sound from drilling in that to bother nesting or mating sage grouse. But this issue is irrelevant because the roads are public roads and they don't know exactly where these sensitive habitats actually are. And in any case, the company hopes to be drilling in September, October, November, which is not the breeding season for the sage grouse. So the EPA's concerns at this point do not really matter. The other one was the Forestry Division of Nevada, which basically sent a boilerplate letter reminding the company of all the requirements for water usage in Nevada. And this brought up what was one of the important issues. One was a confusion about the nature of this environmental assessment, and the other is the more important issue of water. Now, there were about 5 or 6 people who submitted comments, and they all did so in the last couple of days of the period. And a couple of them were just sort of complainers about, the sage grouse are going to be bothered, and I don't like mining, and so on. And several of these were confused, saying, I want to see an environmental impact statement. Well, that's what you do when this is a mining application that you're making. They are not there yet. They need to still find out that there is something worth mining, which involve the other 4 hurdles that missing pieces that I'm going to be talking about. So those concerns are misplaced, and even though the Forestry Division's comments, they really pertain to, well, if they've got something, here are all the things that you need to do. But the most important issue raised by people who live in that Montello area. Montello is a town of about 22 people right next to the Union Pacific Railway that goes through that part of America. And they pointed out that they've been the subject of water restrictions imposed by Elko County since the 2000s. And this is a drought-affected area. And they're limited to, I guess, something, if I read it correctly, 7,000 gallons per day. And some knowledgeable commenters said that when you're doing a drill program like that, you're going to be basically using a month's worth of residential water consumption in a single day. And with all the water coming from a single spring, this is a legitimate concern. And the company has addressed this. The BLM, apparently they've discussed this, and the company says, yes, we will not be drawing any water from the local water supplies. They will get it farther west in the Ruby Mountain range where there's plenty of water. They will have to incur the costs of trucking it all the way from those sources to the project site. But there is a solution to this problem. No, this is a legitimate complaint, and this is why the comment process does serve a good purpose. It raises legitimate issues, and in this case, it's fortunate that there are practical solutions to it. So we do not know yet what the BLM will decide, but the nature of the comments and the answers to them that are obvious suggest that they're going to stick to their finding of no significant impact, and say, yes, we will grant this lease. And if there are any modifications, it will be, you have to promise to not get water from from the from the local sources. So the company is aware of that. They've got their fingers crossed. Until you actually get the piece of paper mailed to you or published, you don't know. So the market's still on the sidelines waiting. And it's no surprise, because the next step will be to drill a series of shallow holes into the bed along where the projected outcrop is on Murdock Mountain. And the first hurdle, or at least the second missing piece they need to overcome is what is the average thickness of the bed? How continuous is it laterally? What is the dip of it? And so that, assuming they get to start drilling in mid-September, by mid-October, we'll have a rough idea of the published intersections of where the beds are, and so on. You can start doing a tonnage calculation. And the hope is that we're going to see a tonnage footprint emerge of 25 million tons or better. And the reason all this geometry information is important, because this is not going to be an open pit mine. There's no strip ratio. So the geometry has to be such that it lends itself to underground, low-cost underground mining, like mining a seam of coal. So that will be the first hurdle to overcome, the post-title granting. The second missing piece is what is the grade of this phosphate bed? But more importantly, what is the grade of everything else that is in these phosphate beds, these phosphorite beds? And we know the grades, we're hoping the grade will be 5 to 10% P2O5, but that's pathetic compared to the 25% plus grades of the beds in Idaho, which are commercially open pit mined and are a primary source of phosphate fertilizer for the United States. Now, the problem with the Idaho beds is that they have a high heavy metal index, including thorium. So they have to chemically process those phosphate beds to produce MAP and DAP, where the heavy metal index has been dropped way below the minimum or maximum required by the food agency for application to crops. But that makes it not organic. So those phosphate beds cannot be used for any organic farming application. We don't have to use manure or something else as their source for phosphate. Now, what makes Murdock Mountain interesting is what outcrop sampling has been done shows that the heavy metals are far below the minimum levels required by the government agency. So we want to know what the geometry of this system is, but we also want to make sure that what they observe, that the outcrop is consistent throughout. So the next sort of major milestone will be not just what the average grade is of these phosphate beds, but do the toxins, the heavy metals, remain below that limited maximum level so that they can treat this as an organic product. Now, the low grade, they would just grind it up and bag it as a whole rock product, but it has to be below these minimums. Now, when they submit the core to the assay lab, this will be 2.5-inch HQ core. So half the core will be cut in half. Then the 1/2 each meter length or 2 meter length will be pulverized and submitted to an assay lab. They'll take a tiny split of it, assay it, and it'll of course be well mixed and all that, so it'll be a representative example of what that interval was, and they'll submit the assays to the company. And hopefully by mid to late October, we will start getting a sense of are these heavy metals below the levels that they need to be so that we continue to have an organic product. And then the remainder of the bags, the sample bags, will be shipped back to the company. And because this is basically the same product that would eventually be shipped to a farmer to be put on the field, they will submit this to a certification outfit, which will then do all the studies to confirm, yes, this meets all the standards of organic. The toxins are indeed below that. So this is kind of like a mini bulk sample, except what you're measuring is the poisons in it or the absence of poisons in it to confirm that, yes, this product will be safe. It can be called organic, and you will have a market for it. And then the fourth missing piece is, well, when we have this product like that, just grind it up, does it actually work? And so that requires agronomic studies. That means shipping it to these control testing outfits where they apply it to a small plot of different crops, and they have control plots where they apply nothing, and they apply the MAP and DAP fertilizers, and then they measure how does the crop perform compared to all these other scenarios. And if it performs just as well, and this will, of course, also determine how much of this stuff will need to be applied to any surface area of a piece of farmland. And that will be a key part telling them, okay, this is what we can market the product as. You need so much of this for so much surface area. When we've got all these pieces together, if the tonnage footprint also adds up to 25 million plus, and the extrapolations for the rest of the stuff all starts to come together, and there's potentially 100 million plus tons underneath the Leech Mountain range where Murdock Mountain sits at one end, and they've figured out where these potentially outcrop and have submitted lease applications for those also. So potentially they have tied up this entire resource, which means this story could become of potential interest to one of the big fertilizer companies who cannot serve the organic market on a meaningful scale. So we have a little $3 million company, let's say they have to double their 56 million fully diluted to $100 million, 100 million shares to fully fund this. If this company gets a buyout offer for $100 million by one of these big fertilizer companies, well, that's a 20-bagger. That's a $1 stock from 5 cents to $1. So this is what bottom fishing is all about. I've outlined all the risks. We haven't eliminated even risk number one, missing piece number one of the 5 missing pieces. But what's beautiful about this is that this is all going to be compressed into a 1-year timeline. Because with the permits, if they get this permit, they will be able to do all the drilling they need to understand what the tonnage is, do proof of concept with the core that they have extracted, and then try and find a buyer to take over the whole thing and take care of these bigger picture issues like where is the water going to come from. It's very helpful that there's a railway that goes right past this area, which could potentially deliver water from who knows where. So this story, everybody who owns the stock is on tenterhooks, dreading that they get a thumbs down in a week or two, and everybody else is on the sidelines waiting for a green light to move into this stock. So you have to be a true contrarian and have the knots in your stomach to buy and own this stock right now, Nevada Organic Phosphate.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.